Hello students, in present video I am going to explain about third problem from consignment topic. In this problem I am going to concentrate on unsold stock. So I am making this video for degree students. Previous videos links are available in the description box. Let us see the question first.
On 1st July 2021, Ahmedabad Mills Limited of Ahmedabad consigned 1 lakh worth goods to their Chennai agent. Ahmedabad Mills Limited paid carriage 700 rupees, dock charges 200 rupees and miscellaneous expenses 300 rupees up to 31st December 2021, on which date Ahmedabad Mills Limited closes its books. Agent sold 3/4 of the goods for 1,10,000 rupees. Chennai agent paid octroi 1,000 rupees, rent 850 rupees, insurance 700 and other expenses 500. Chennai agent remitted the amount due to Ahmedabad Mills Limited after deducting his commission at 5% normal, 2.5% overriding and a 0.5% del credit. Agent found that one customer to whom credit of 40 days was allowed paid only 4,800 rupees out of the total amount of 5,000 rupees due from him in full settlement of account. Bank draft was sent by Chennai agent for the balance. Prepare necessary ledger accounts in the books of both the parties. This is the question. Let us see the solution for this.
Main points of the problem I have written on the board. Ahmedabad Mills Limited is one firm. They are running their business in Ahmedabad. So not only in Ahmedabad, they want to sell goods in Chennai also. So they appointed one agent in Chennai. The agreement is they send their goods to Chennai agent. So in favor of Ahmedabad Mills Limited, this agent has to sell the goods in Chennai. So from sale proceeds, he can take his commission. Remaining amount he has to send to Ahmedabad Mills Limited. Here, Ahmedabad Mills Limited is known as consignor because they are sending goods. Agent is known as consignee because he is receiving goods on consignment basis. So this Mills Limited sent goods on 1st July 2021 worth 1 lakh rupees on consignment. To send these goods, they incurred some expenses. On cartage 700, dock charges 200, miscellaneous expenses 300. So consignor total expenditure is 1200 rupees. So consignee received the consignment. Year end is 31st December 21. So up to that date, consignee is able to sell 3/4 of these goods. He sold the goods for 1,10,000 rupees, out of which 1,05,000 is cash sale, 5,000 is credit sale. So debtor has to pay 5,000 rupees to agent now. This debtor failed to pay full amount. So he paid only 4,800 rupees to agent. Means 200 is bad debt loss. Then to sell these goods, consignee also incurred some expenses. Octroi 1,000, rent 850, insurance 700, other expenses 500, total 3,050 rupees. So consignee is entitled to take 3 commissions. Ordinary commission, normal commission 5%, overriding commission 2.5%, del creditor commission 0.5%. So as there is no other information, all these commissions we have to calculate on total sales. And final amount consignee is paying to consignor in the form of a bank draft. So for this problem, he is asking ledger in both parties. So ledger of consignor, ledger of consignee we should prepare. First, ledger of Ahmedabad Mills Limited, consignor. So in their ledger, we have to prepare consignment account, agent account and goods sent on consignment account. So consignee is living in Chennai, no? Therefore, for this consignment word, you should add consignee's alias name, Chennai. Chennai consignment account is the first account. So this account is prepared to know the profit or loss in consignment business. So this account is a nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. So consignment business related expenses, losses, debit side we have to show. Consignment business related incomes and gains, credit side we have to show. In previous problem, dates were not given. But in present problem, dates are also given. So in account, date column also we open. Date particulars amount. So next account is agent account. This is a personal account. So consignor prepares agent account to know the due amount from agent. Next, to know about the goods sent on consignment, he prepares goods sent on consignment account. So about goods he is going to record in this account. So goods means asset related accounts are real accounts. So this is a real account. So we are preparing ledger in Ahmedabad Mills Limited now. Therefore analyze all transactions from Ahmedabad Mills point of view. So from consignor's point of view, you have to analyze the transactions. First what happened? On 1st July 21, consignor sent goods on consignment basis. Cost 1 lakh. So cost, debit side we should show now. 1 lakh rupees. Date is 1st July 21. For this you have to write to goods sent on consignment account. So what is the journal entry for this? Chennai consignment account data to goods sent on consignment account. We are preparing goods sent on consignment account also. So in entry, goods sent on consignment account is created now. Therefore in this account, credit side we have to post. Date is 1st July 2021 by debit account name. Chennai consignment account. 1 lakh rupees. Next what happened? Consignor incurred 1200 rupees expenditure. So expenditure in consignment account debit side we have to show no 1200 rupees. When date is not given. So if date is not given, year end date we should write. So 31st December 2021. By that date, he spent this expenditure no. Therefore, mention year last date here. If consignor pays this amount in cash form, here we should write to cash account. Through a bank, if he pays, we have to write to bank account. Our assumption is through bank he paid. So write down to bank account. Means what is the journal entry for consignor's expenses? Chennai consignment account data to bank account. So bank account we are not preparing. Therefore second time posting you need not to show here. Next what happened? Consignee sold goods for 1,10,000 rupees. So in this, cash sale is 1,05,000, credit sale is 5,000. In consignee's books, clearly we have to show cash sale, credit sale separately we have to show. Not in consignor's books. So for consignor, sales 1,10,000 is income. So incomes which side we have to show here? Credit side 1,10,000 rupees. And date, by 31st December 2021 he sold. Therefore, for sales date is last date of the current year, 31st December 21. Who sold? Agent. So in future, agent has to pay that amount to us. Means for this amount, agent is a debtor. Debtor means asset, asset shows a debit balance. Means while writing sales entry, agent account should be debited. In consignor's books, agent account should be debited. Agent account debtor, sales amount 1,10,000 rupees. 2. In Chennai consignment account credit side I want to post. Means we have to credit Chennai consignment account. So this is a journal entry for sales. We are not preparing journal now. Therefore, simply you have to remember the entry. No need to write anywhere. So in consignment account, credit side we have to post. What to write here? Debit account name. By agent account. You may get one doubt. 5,000 is credit sale. And that debtor, that a customer failed to pay full amount. So as a final settlement, he paid only 4,800. 200 bad debt is there. What about that bad debt? We are not considering that bad debt while writing this amount, no? Because in present problem, consignor is allowing del creditor commission to consignee. So when del creditor commission is given to consignee, consignee is responsible for bad debt loss. So consignor is not concerned with that 200 rupees loss. Therefore, in consignor's books, you need not to write that 200 anywhere. See the journal entry, agent account debtor to consignment account. Agent is debited. So in agent account, debit side you have to post the same entry. Date is same, year last date to Chennai consignment account. Sales amount 1,10,000 rupees. Next what happened? Consignee's expenditure 3,050. In consignment account, consignment business related expenses we have to show on debit side now. Date, last date of the year. Because for consignee's expenses, proper date is not available. What to write in particulars column? In consignment account, debit side I wrote. Means in journal entry, Chennai consignment account will be debited with the 3,050 rupees. Who paid this expenditure? Agent. In future, we have to return this money to him because our goods he is selling. So, to us, to consignor, agent is becoming a creditor for this amount. Creditor means liability. Liability shows a credit balance. Therefore, we have to credit agent account. So, here to agent account. Agent account also we are preparing. In entry, agent account is created. Therefore, credit side we should post. Date is last date of the year by debit account name. Chennai consignment account. Amount 3,050. Next, consignee's commission. 3 commissions. So to the consignment business, this commission is expenditure. Expenditure means you have to show on debit side. Means in entry, consignment account should be debited. To whom we have to pay this? To agent. So for this commission, agent is a creditor. Creditor means liability. Liability should be credited. Therefore, credit agent account. So for consignee's expenses, for consignee's commission, in consignor's books, same entry. Same posting. Debit side to agent. For commission also date is not given. No? Write down year last date. 31st December 21. Commission we have to calculate. Total sales amount 1,10,000. No? Normal commission 1,10,000 into 5 by 100. Next, overriding commission 1,10,000 into 2.5. I am writing as 2.5. 2.5 divided by 100. 2750. Next, del creditor commission on total sales. Half means I am writing as 0.5. 550. Add these 3 commissions, total in outer column. 8,800. So same entry comes in agent account also. Credit side by Chennai consignment account. Commission amount 8,800. Everything is completed. Finally, find out unsold stock value. Unsold stock I am calculating here. Once you recollect second problem. In that problem, unsold stock is given in the form of quantity. So 200 bales were sent by consignor, 180 bales were sold by consignee, 20 bales are unsold. So one bale cost price is given. But here, quantity is not given. Total goods sent 1 lakh worth goods. How many? That information is not available. 3/4 is sold. So in the form of fraction, he is giving unsold stock information. So in case of fraction, total value is 1. In this, 3/4 is sold. So remaining stock is 1/4. No? So that 1/4 goods value we should calculate. How? First, 1/4 goods cost we should calculate. Total goods cost is 1 lakh rupees. 1 lakh into, I need unsold stock. No? Unsold stock is 1/4. So multiply with 1/4. 25,000 rupees. To this, direct expenses of consignor and consignee we should add. In second problem clearly explained. So consignment business related expenses are of 2 types. Direct expenditure or non-recurring expenditure. Indirect expenditure or recurring expenditure. Direct expenses are rare expenses. So they increase the value of goods. Means while calculating unsold stock, direct expenses we should add. Indirect expenditure is repeated expenditure. Therefore, while calculating unsold stock, indirect expenses we should not add. Come to consignors expenses. Cartage means transport. So from Ahmedabad to Chennai, how many times he transports these goods? Only for one time. Therefore, this cartage expenditure is only one time expenditure, direct expenditure. Dock charges. So when he is sending goods through ports, then to port authorities he has to pay some amount known as dock charges only for one time. Miscellaneous expenditure. So while sending the goods only he is incurring this expenditure. So this is also one time expenditure. So these three expenses are direct. Means we have to consider. On total goods, direct expenditure is 1200. We are calculating unsold stock value, no? So unsold stock related expenses only we should consider. How it comes? Total direct expenditure of consignor is 1200. In that, 1/4 only we should consider, 300 rupees. Next, come to consignees expenses. These are consignees expenses. Octroi. So from Ahmedabad to Chennai when goods are coming. So when from one place to another place we are moving the goods, to municipal corporation we have to pay some local taxes known as octroi. So on these goods, only for one time consignee incurs this, means octroi expenditure is direct expenditure. Next, rent. Suppose go down rent, shop rent, every month he pays, means indirect expenditure. Insurance. So there is no proper information regarding insurance. Suppose insurance in transit is given, means for bringing the goods from Ahmedabad to Chennai, agent took insurance policy and he paid insurance. Then that insurance is only for one time, means it comes under direct. Suppose insurance is paid against fire accident policy. Consignee is maintaining one godown, no? So for the safety of this godown, for the safety of his shop, assume he has taken fire insurance policy. Then this insurance premium every year he pays. So means that is indirect expenditure. Here there is no proper information, no? Our assumption is this insurance is one indirect expenditure. Next, other expenses. So when proper information is not given about any expenditure, then we should assume that if that expenditure is paid by consignor, it is direct expenditure. If that expenditure is paid by consignee, that is indirect expenditure. So other expenditure name is not available and it is paid by consignee. So our assumption is this is indirect expenditure, means we should not consider. So only one expenditure, octroi, is direct. All other expenses are indirect. So 1000 rupees. 1000 is paid on total goods, no? But we need proportionate expenses of consignor and consignee. So how to calculate that? On total goods, consignee's direct expenditure is 1000. We want 1/4 goods related expenditure only. So into 1/4, 250 rupees. Add these three amounts, 25,550 rupees. So this unsold stock, where we have to show in consignment account, credit side. So just like trading account. In trading account also, opening stock on debit side, sales credit side, purchases debit side, closing stock credit side we used to show. Here also same. Credit side, 25,550 rupees. When last date of the year, in particulars column we have to write by consignment stock account. Means what is the journal entry for unsold stock? Consignment stock account data to Chennai consignment account. So consignment stock account we are not preparing now, therefore second time posting is not required. Finally, close this account by finding profit or loss in consignment business. Observe, credit side total is more than debit side total. So credit column total is 1,35,550 minus debit column total 1,13,050. Difference is 22,500. So credit side we wrote incomes, debit side expenses. Income is more, no? Therefore this answer is profit. Debit total is less, So debit side you have to show this profit amount 22,500. Further date is last date of the year. This profit we should transfer to profit and loss account. Therefore here you have to write to profit and loss account. So what is the entry for profit in consignment business? Chennai consignment account add to profit and loss account. Two sets put the highest total. Next come to agent account. Debit total is more than credit total. So in rough work, debit total 1,10,000 minus credit column total 11,850. Difference 98,150. Credit side total is less now. Show here 98,150. This is the due amount paid by consignee. Consignee paid this amount through a draft. Therefore, we have to write bank account. Date, last date of the year. So entry is bank account debtor to agent account. Totals this side also same 1,10,000 rupees. Next account the goods sent on consignment account. We have to close this by transferring the balance to trading account. So debit side, write down that 1 lakh rupees. Date is last date of the year, 31st December 21 to trading account. So by transferring to trading account, we have to close this account. Put the totals. So ledger of consignor is completed. Next come to ledger of consignee. As we are preparing ledger in consignee's books, we have to analyze the transactions from consignee's point of view. Consignee prepares only one account, that is consignor's account, Ahmedabad Mills Limited account. First what happened? He received consignment. So these goods details he records in stock register. Therefore no need of any entry. For consignor's expenses also there is no entry in consignee's books. Next, consignee sold the goods. So the sales income, consignee has to return to consignor, no? To consignee, consignor is becoming creditor for this amount. Creditor means liability, liability shows a credit balance. Therefore, we should credit Ahmedabad Mills Limited account with the sales income 1,10,000 rupees. So in this 1,10,000, 1,05,000 is cash sale. Means cash is coming for that. Otherwise, through a check, through a DD, we received that amount. My assumption is through a check or through a DD, consignee received this amount. Means his bank balance is increasing because money is deposited in bank. So bank is a receiver, therefore debit bank account. Bank account is a personal account, no? Personal account rule, debit the receiver, credit the giver. So bank is a receiver for 1,05,000 rupees. Because this money is deposited in consignee's bank account, therefore we are debiting bank account. And 5,000, consignee sold goods to customer for 5,000 rupees. Then customer becomes a debtor to consignee. So debtor means asset, asset shows a debit balance. Therefore we have to debit this 5,000. What to write here? Customer account. Otherwise debtor account. So this is the entry for sales in consignee's books. Ahmedabad Mills Limited account we are preparing, no? That account is credited. Therefore credit side we have to post. By bank account 1,05,000 rupees. By debtor's account 5,000 rupees. Sales date is not given. By the end of the year they sold, no? Therefore year last date we should mention here. 31st December 2021. Next what happened? Consignee's expenses. So consignee is paying this expenditure through his bank account or in the form of cash. My assumption is through bank account he is paying. So bank account is a personal account, no? Debit the receiver, credit the giver. So bank is paying this amount. Therefore we should credit bank account to bank account. Consignee's expenditure 3,050 rupees. At present he is paying, but in future he has to receive this money from consignor only. So consignor is becoming a debtor for this amount. Debtor means asset, asset shows a debit balance. Therefore we should debit Ahmedabad Mills Limited account. This is entry for consignee's expenses in consignee's books. Ahmedabad Mills Limited is debited. So debit side we should post. To bank account 3050. Year last date 31st December. Next is for consignee's commission. Commission amount we calculated here 8,800. To consignee this is commission income. So incomes come under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. So income he should credit to commission account 8,800. From whom he should receive this income? From consignor. So for this income, consignor is becoming a debtor. Debtor means asset, we should debit. Therefore, debit Ahmedabad Mills Limited account. So this is the entry for commission in consignee's books. Ahmedabad Mills Limited is debited. Therefore, debit side we should post to commission account. Date is year last date. Next come to bad debts. So consignee is taking del creditor commission. Therefore, if there is any bad debt loss, he is responsible for that. So even though 200 is not coming, total sales amount 1,10,000 rupees consignee has to pay to consignor. That is why in consignor's books the 200 is not a loss to him, so we will not consider the 200. But who is bearing the 200 loss? Consignee only. So in consignee's books we have to show that. See, in sales entry we debited debtors account with 5,000. No? Now from this debtor amount K, then this debtor account we should cancel. By debiting we created debtors account. If you want to cancel, you have to credit. Debtors account 5,000. How much money came from debtor? 4,800. So that 4,800, if he pays in cash form, we have to debit cash account. If he pays through check, DD, wallet, etc., we have to debit bank, because bank is a receiver here. So my assumption is through a DD he is paying. Debit bank account. What about this 200 rupees? This 200 is not going to come. So this is called bad debt. Bad debt is a loss. Losses come under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Therefore, we should debit 200 rupees. What to write? Bad debts account debtor. So this entry, we need not to post in Ahmedabad Mills Limited account, because Ahmedabad Mills Limited is not there here. So if you are not writing any journal entries, then simply you can ignore about this bad debt in consignee's books also. Suppose you are writing journal entries, then in consignee's books for bad debts, this is the journal entry. Now finally, balance this account. Credit total is more than debit total. So in rough notes, calculate the totals of two columns, find out the difference. This difference, debit side we should write, because debit side total is less. This is the due amount paid to consignor when last date of the year. How consignee paid this amount? Through a draft. Therefore, for this answer you have to write bank account. Two sides put the totals. Highest total 1,10,000 rupees. So ledger of consignor, ledger of consignee are completed. So this is all about third problem from consignment topic. Hope this video is helpful to you.